People are saying that America's oldest bank, BNY Mellon, wants to launch a crypto custody platform. Well, I must have heard it right. But of course, with cryptocurrency being one of the rising trends these days, it will be no shock that the United States of America's oldest bank would want to be in the trend. Of course, even though companies are old, they need to be in trend to survive. Even South Korea's leading entertainment company, SM Entertainment, is in talks of entering the world of cryptocurrency. Let us know more about BNY Mellon and its journey into launching a crypto custody platform. First of all, let us get to know more about America's oldest bank, BNY Mellon. Commonly known as BNY Mellon, the Bank of New York Mellon Corporation is an, of course, American investment banking services holding company with its headquarters situated after its name in New York City. It was formed from the merger of the Bank of New York and the Mellon Financial Corporation in 2007. It is the world's largest custodian bank and securities services company with $2.2 trillion in assets under management and $41.7 trillion in assets under custody as of the second quarter of 2021. It is considered a systematically important bank by the Financial Stability Board. Oh, and in case you didn't know, the Financial Stability Board is an international body that monitors and makes recommendations about the global financial system. It was established after the G20 London summit in April of the year 2009 as a successor to the Financial Stability Forum. The company is incorporated in Delaware. Through its Bank of New York predecessor, it is one of the three oldest banking corporations in the United States of America and among the oldest banks in the world. It was established in June 1784 by a group that included America's founding fathers, Alexander Hamilton and Aaron Burr. Mellon and Sons Bank was founded in Pittsburgh in 1869 by Thomas Mellon and two of his sons, Richard and Andrew. His son Andrew W. Mellon soon became the Secretary of the Treasury of the United States of America. Now, how did the Bank of New York become the Bank of New York? The first bank in the United States was in the Bank of North America in Philadelphia, which was chartered by the Continental Congress in 1781, where Alexander Hamilton, Thomas Jefferson, and Benjamin Franklin were among its founding shareholders. In February of 1784, the Massachusetts Bank in Boston was chartered. Due to the lack of banks, the shipping industry in New York City, and because its investors envied the 14% dividends the Bank of North America paid, and after months of local discussion culminated in a June 1784 meeting at a coffee house on St. George's Square, it led to the formation of the Bank of New York, where it operated without a charter for 7 years. The founders' initial plan was to capitalize the company with $750,000 and a third in cash, and the rest in mortgages. But after this was disputed, the first offering was to capitalize it with $500,000 in gold or silver. When the bank was finally able to open in June 1784, the full $500,000 was not able to be raised. With those 723 shares had been sold, held by 192 people, where Aaron Burr had 3 of them and Alexander Hamilton had 1.5 shares. The bank's first president was Alexander McDougall, while the cashier had been William Seton. The bank's first offices were located in the old Walton Mansion in New York City, and in 1787 it moved to a site in Hanover Square that the New York Cotton Exchange later moved into. The bank was able to provide the United States government with its first loan in 1789 and was orchestrated by Hamilton, the then Secretary of the Treasury, and with the money, the government was able to pay the salaries of the United States Congress members and President George Washington. The Bank of New York was the first company to be traded in the New York Stock Exchange when it first opened in 1792 and in 1796. The bank was able to move to a location at the corner of Wall Street and William Street, which eventually became the present-day's 48 Wall Street. The bank used to have a monopoly on banking services in the city until the Bank of Manhattan Company was founded by Aaron Burr in 1799, in which the Bank of New York and his supposedly best friend, Alexander Hamilton, was against its founding. So much about that. Before we move on to the bank's journey to launch an institutional crypto custody service, let us know what cryptocurrency is. Cryptocurrency, or crypto is a digital currency designed to work as a medium of exchange through a computer network that is not reliant on any central authority, such as a government or a bank, to uphold or maintain it. Individual coin ownership records are stored in a digital ledger, which is a computerized database using strong cryptography to secure transaction records, control the creation of additional coins, and verify the transfer of coin ownership. Cryptocurrency does not exist in physical form like paper money and is typically not issued by a central authority. These typically use decentralized control as opposed to a central bank digital currency of CBDC. When it is minted or created prior to issuance or issued by a single issuer, it is generally considered centralized. With decentralized control over it, each cryptocurrency works through distributed ledger technology, typically a blockchain, that serves a public financial transaction database. A cryptocurrency is a tradable digital asset, a digital form of money, built on blockchain technology that only exists online. These currencies use encryption to authenticate and protect transactions, hence their given name. There are currently over 1,000 different cryptocurrencies in the world, and of course, their supporters would be able to see them as the key to a fairer future economy. Now let us move on to the Bank of New York's voyage in launching an institutional crypto custody service. In the year 2022, the Bank of New York is reportedly gearing up to become the first bank to enter the global digital custody space. According to a report reported by the City AM on February 24th, BNY Mellon's upcoming custody platform will be aimed at institutional clients, enabling big players to hold their Bitcoin and Ethereum in the bank's crypto wallets. Meeting institutional demand, the bank's Chief Risk Officer for Asset Servicing and Digital at BNY Mellon, Katie Niet, said about the new journey. We announced last year that we were standing up for digital asset users. The idea is that we build a digital asset platform, the cornerstone of which is custody, that will enable the interoperability of traditional assets and digital. The head of digital asset custody commercial products at the bank, Talia Klein, explained that they think what we are seeing in the UK is that there's a really vibrant and active digital assets market here. Furthermore, although Bitcoin and Ethereum will be the first two cryptocurrencies supported by the new platform launch, and other tokenized traditional and digital assets will likely be added in the near future. I think regulatory clarity is improving and people are feeling more confident because of that regulatory clarity. It's at least easier to read the tea leaves and understand what to look for when you're developing a risk framework, Niet added. Under BNY Mellon's incoming crypto initiative, their clients would be able to hold leading digital currencies such as Bitcoin or BTC or Ether or ETH in their crypto wallets. Furthermore, the bank has mentioned that these digital wallets will have backing from Fireblock technology. They have also stated that it will debut its crypto custody platform in the United States. Regardless of that, the company is open to global expansion based on market demand, and in fact, the bank's head of digital asset custody commercial products has suggested that the next stop could be none other than Britain. For the past year, BNY Mellon has been making huge progress in the digital currency space. After their first announcement in February of last year, later in July of the same year, they announced an agreement with the crypto asset manager, Grayscale Investments. Pursuant to the collaboration, the Bank of New York would provide a range of services for Grayscale Bitcoin Trust or GBTC, and the Grayscale flagship BTC investment product provides indirect exposure to the leading digital currency. Also, recent reports have found and discovered that BNY Mellon had partnered with blockchain data platform Chainalysis to help track and analyze crypto products. Utilizing Chainalysis compliance software within its risk management system, BNY Mellon seeks to track user crypto transactions. Chainalysis' suite of resources currently includes Know Your Transaction, which shifts through the data to determine the withdrawals or deposits are high risk. The KYD feature can block a transaction if it identifies a crypto transfer to a sanctioned wallet address. BNY Mellon currently has more than $46 trillion in assets under custody. The banking giant is also the world's largest holder of securities, commodities, and cash. Now, would you be willing to invest in this new and trendy cryptocurrency thing? Be sure to leave your thoughts and opinions in the comment section below, and also do not forget to like, subscribe, and click the bell button for more notification from us. That is all for today, and see you next time.